specifically select your small caps for your small cap fund, what is the criteria that you use? Some investors are equally concerned. Is there a bubble in the making? Is there a correction on the cards? Investors often find it very, very difficult to believe that small caps can even deliver negative returns, but that happened in 18 and 19.
Typically, we would prefer to have businesses which can grow at 20% or higher on profit terms every year.
पिक्चर अभी आधी भी नहीं हुई है, अभी तो ट्रेलर तक भी नहीं पहुंचे हैं. अभी क्या लगता है? What does it look like? Have we reached towards the end of the blockbuster now? Good afternoon, investors. This is Shalini Gera, and I welcome you to yet another collaborative podcast titled School of Thought. Small caps is having a rally that just doesn't seem to stop, and investors are grinning ear to ear about it. For a perspective, Sensex in the past 1 year has delivered an 18% return. BSE Midcaps have delivered a 45% annualized CAGR, and BSE Small Caps have delivered an astonishing 48% CAGR over the past 1 year. Some investors are equally concerned. Is there a bubble in the making? Is there a correction on the cards? So to answer all of these questions and also to give you an insider's perspective, we have Mr. Chandprakash Padiyar, Fund Manager, Tata Asset Management Limited, to whom we fondly refer to as CP. Welcome to our show, CP. How have you been?
Thank you, Shalini, and pleasure to be on your show. And we've been very well. Markets have been, as you rightly said, small cap, for example, is up 48% in the last 1 year. So very, very well.
And congratulations on the phenomenal performance of your own small cap fund too. In the past 5 years, it's delivered almost a 25% CAGR.
Yeah, it's more than 25, but yeah, thank you.
All right. So CP, before jumping into specifics about small caps, I want to discuss with you the overall state of the economy. First of all, let's understand for our viewers as to where we stand amongst our global peers in terms of our market attractiveness. And secondly, after the rally of the indices that I've just mentioned, does it look like that there is a correction on the cards?
So I would say, well, first of all, we need to kind of have two different views on economy and markets, meaning that both sometimes work together and sometimes may not work together. Having said this, as of now, both are working very well for us together. As in, from an economy perspective, the first part of your question, I think everything that I look at, whether it is the banking sector, real estate, capital expenditure, infrastructure, job creation, government discipline on fiscal, monetary policy, macro indicators, any indicator that you see for India today, one, they are looking very good. But importantly, the incremental trend, or let's say the immediate 1-2 year potential that we see looks better than where we are today. So economy is in every sense, we are having best of all worlds today. At a time, and you also asked comparing with other peers, we are in a time where every other global economy is either slowing down already, has already slowed down, or is now going to slow down. Central banks across the world are kind of in the discussion mode whether inflation is now under control and should we start cutting rates. And so they are in a different mode, whereas if I don't know whether you've noticed, just today's CNBC news report, I was just going through that. And every other day nowadays we are having to either read this in media or listen to this, wherein they are talking, or the analyst or reporter communities or journalist community is talking about a fact that the RBI, Reserve Bank of India, is trying to control growth, trying to tell banks that please don't grow so fast, trying to tell them that please control your growth. We don't want to allow you to grow as fast as what you are today growing. So we are in a phase where government and the central bank both together are basically saying we are growing very fast. We need to be slightly slower than that. Whereas every other part of the world is saying that we are very, very slow. We need to grow faster. So it's a very, very different phase where we are in. And in line with that, earning growth for corporates are good, which is what is getting reflected in the markets today. So as I said, both markets and economy are working together as of now. But at some point in time, and we'll probably come in the other questions that you must have. But there is an element of valuations that have moved higher. And like you said in your opening remarks, should we expect corrections or not? Well, we've not seen a major correction or even a time correction for some time now. It is advisable, at least I hope for a correction nowadays, either a price or a time correction, because that is generally very healthy. We've not seen it for some time now.
All right. So major macroeconomic indicators, very preferable for India, good fiscal discipline on the government side, good manufacturing activity happening, great infrastructure. So it looks like the economy is on a plus side as compared to its global peers, and we are continuing to grow. Okay, moving on to our next question. So when you specifically select your small caps for your small cap fund, what is the criteria that you use?
So it's not specifically for small caps. Any business that we look at, there are, first of all, we as Tata Mutual Fund, we believe in the investment philosophy of growth at reasonable price. By that, we mean that we would like to buy businesses which we believe can grow at a fast pace over a period of time. The second is they should be generating free cash. And lastly, reasonable valuation. And let me define it for you. So what we look for is that typically when we say growth, businesses should be growing at a fast pace. Typically, we would prefer to have businesses which can grow at 20% or higher on profit terms every year. Our churn rates are very low, as you've seen in the last 5 years or so, which means that whatever we buy and hold for a longer period of time. So generally, we want to buy something which can scale significantly over a period of time. And at the same time generates free cash over a period of time, so that the management or the business does not need to raise capital, either debt or equity, from the market very often. And our experience, or my experience over the last 23 years, tells me that if a business can self-fund its own growth over a period of time, then the market tends to reward that business or that management very handsomely from a valuation re-rating perspective, which is what we're looking for. So high growth with a combination of free cash, and at the time of buying, valuations are on the reasonable side. What I mean by that is that we are generally early in the market, meaning that we identify either management teams or industry trends early on when nobody is looking at it, and then we hold on to that business for that and allow that management to deliver consistently over a period of time in terms of earnings. And as and when markets get surprised in the potential of the earning that the business is delivering, we are then rewarded by a re-rating of valuations. And it's happened with us for many businesses in the past 5 years. And that's what we look for. On small cap specifically, one key thing that is very important, and since you asked me this question, is the quality of management that we are buying into. Because not all management, at least our experience, or my experience over the last 23 years, have told us that the quality of people that you bet on is extremely important, especially so that you don't make mistakes. In small caps, at least historically, I've seen that volatility tends to be very high. It's not been so in the last 3 years, but at least 23 years, my experience tells me that you should expect higher volatility in the small cap segment. What happens in high volatile periods is that typically wherever management quality is good, where corporate governance standards are held on very well, or where balance sheet quality, the management wants to run a business with free cash generation, the market does not penalize those kind of businesses sharply during bad times or during correction periods. And that is what I mean by mistakes. You should not own companies or we should not be stuck in companies in our portfolio where stock prices go down by 50-80% from the all-time highs. We are at all-time highs almost every day. The markets are going higher, and it is our responsibility today to move to businesses or stick to only those businesses where you may not make too much very high returns in a short period of time, but you will protect your portfolio on downsides when things go bad or whenever that correction happens. And that is, so our responsibility is both sides. One is high return perspective as well as the risk. So risk reward is what we need to focus on. And in small caps, it is very important what quality of management that you choose and what you stick with. And that is what our focus is always.
Okay. Any restriction in terms of the market cap, and typically what are the number of companies that you are looking at in the small cap segment?
Yeah, so it's more an internal. There is no fund feature specific restrictions for us. The universe is very large. For example, as of June list, the small cap, the 251st company is something like 17,000 crore market cap and below. So any company below 17,000 crore is good for a small cap fund. Our internal thought process has been historically that we will avoid businesses below 1,000 crore market cap. So in the last 5 years, on an average, we have avoided businesses below 1,000 crore market cap. Incrementally, given that our fund size has grown slightly, we are today close to 5,800, 6,000 crore AUM. We have now started focusing more on companies above 2,000 crore in terms of market cap. The good news is that between 2,000 crore and the 251st company, which I believe when the January list comes, every 6 months this definition of small cap changes. It looks like that this time around the 251st company market cap will be more like close to $3 billion. So amazing it is. When we launched the fund, Tata Small Cap Fund in 2018, at that time the 251st company market cap was something like 6,500 crore in that band. Today that same company, 251st, not the same company, but 251st company in the market listed space is probably around 25,000 crore market cap. So that's the significant increase. But the other thing that I want to highlight is that from that 251st company to 2,000 crore market cap, the choice of companies that I still have is significant. It is almost like 550 to 600 companies to choose from. So the small cap universe, even between 2,000 crore and higher, is fairly high, and that's what we look at.
All right. So you talked about growth at reasonable prices, ability to hold these businesses for a long term without too much of a churn. You talked about free cash flows, and you talked about reasonable valuations. Which sectors are you continuing to bet on in today's times, and why?
So generally speaking, given our investment philosophy, we are more bottoms up in approach, as in meaning that we would ideally want to buy businesses rather than sectors. As I said, our focus, especially in small caps, our focus is more on management team rather than sectors. And hence, you would observe that in our portfolios, in most times, you will not see any particular skewness to a particular sector in the portfolio. You will find the portfolio is extremely diversified from a sectoral perspective, but that's a derivative of what we do. We have bought individual companies in the portfolio. And hence, I would say that we generally, when we build a portfolio, even today when I've built a portfolio, the reason I say this is that in the last 6 months, we have completely changed our portfolio. We've changed a very large part of Tata Small Cap Fund portfolio. So we are today sitting on a very new portfolio in that sense. And when we have created this new portfolio today, we are now positioned for the next 3-4 years. I don't think we have bought that portfolio in keeping a sector in mind. Having said this, there is a theme that generally does play very well in small cap segment, and that's been true for the last 5 years, is the manufacturing theme. A large part of small cap universe between 2,000 crore and let's say 25,000 crore market cap in that band, the company that I said to 550, 600 companies, around 60-65% or higher is manufacturing, logistics, supply chain related companies. So in many ways, small cap universe for me is largely manufacturing oriented. Various sectors within manufacturing, but a largely manufacturing oriented segment. And this is the segment where India is, and that's where you would hear nowadays regular stories or news on China +1, Europe +1, Make in India, Atmanirbhar Bharat, defense, railway, so many things that every day those news flows come. It's largely in the small cap universe, and that is what we are focused on. And there are individual companies in consumer services, all other sectors are also there. But if you look at our portfolio, Tata Small Cap Fund, from a sectoral perspective, we don't see too much of a skewness or a focus.
All right. The government is talking big on defense as well as clean energy space. So is that also included within the portfolio?
So maybe on defense side, our preference, or not only defense, but generally for all businesses, our preference has generally been for private sector businesses over public sector entities. There are some public sector entities as well, which are part of the Tata Small Cap Fund portfolios, but it's very selective and very far and few. Defense, as of now, has largely been a public sector companies kind of servicing the government for the defense requirements. Incrementally, it is only now that some private companies are starting to get some initial businesses from the defense ministry for the armed forces for their from the private sector companies. The scale will come over a period of time. So we are monitoring some of them, and over a period of time, we'll look at those names to maybe become part of the portfolio. Clean energy, we have both clean energy and defense. We are playing in a very different way. We are actually playing through supplying to the subcontractor in that sense. Sure. So we are playing the third tier and fourth tier actually, rather than playing tier one in defense and clean energy. That's where we think there are better opportunities to make money.
Sure. So one thing that I found very interesting is that in the last 1 year, the indices have outperformed most of the funds. So index typically has delivered somewhere around a 50% return, but most small cap funds have delivered a return which is lesser than that. So why has that happened in the past 1 year?
And so I've been kind of saying this for some time that this will happen. And it's actually happening now. And in fact, my view is that for the immediate 3-6 months also, this can continue to happen. And a big reason why I think that way is that, first of all, I must tell you this, and you would know this already. There's all small cap funds are getting a lot of flows, positive flows. The industry itself, all mutual funds have got significant amount of positive flows every month. That's one. Secondly, there are new mutual funds who are launching their own small cap funds even now, month of December as well. Then on top of that, there are insurance companies who have been launching their small cap funds now. They've been missing in the small cap space for 5 years now. So, there is this lot of new money that is coming in today. And when new money comes in, so before I come to the new money, let's take the case of existing funds getting fresh money through SIP or STP or lump sum every month. When I come to office every day, if I keep getting money, the only thing that I do is I buy, I don't sell. So it becomes, in the process, you start seeing valuations across the board going higher. Your delivery volumes for many businesses, I'm talking from a technical perspective in the listed space. My observation is that delivery volume for most businesses is going down because the activity on selling side is much lower today, and the buyer wants to deploy capital. And when you want to deploy capital, you start looking for liquid names, and you generally go more towards benchmark indices than outside of the benchmark index because those are the larger size companies. That's one part. The second is when new people come in, which is new funds or insurance industry launching their small cap funds. The first port of call is generally to look at liquid names in a larger manner, or towards more the benchmark indices. And that's what I've been, in fact, that's what I said. I've been expecting this to happen. And so, in fact, you would notice, and this is quite interesting to see, that not only small cap as a category, you look at across categories, large cap, mid cap, large and mid cap, focused, hybrid, most categories, including small caps. The one common theme for fund performance in the last 12 months has been that a fund which has more number of stocks in the portfolio is doing better than a fund which has less number of stocks. Basically, it means that in the last 6 to 12 months, the momentum in the market has been so strong that stock selection is kind of taking a backseat today. It does happen in every cycle in a momentum market. You will always see this kind of activity. But we are now starting to see a lot of increase in supply of paper. Till now, I was talking about demand of paper, which is money coming in. Incrementally in the last 3 months and increasingly every day, every week now, supply of paper is catching up today. And my own sense is, though I said that the next 3-6 months this may continue this trend, but my own sense is that if we are talking next year December same time, by the time December next year comes in, the flavor of the market will completely U-turn. That's my sense, which means that stock selection will once again become a part of the, or will become very important in the market. And we would hope to do well again that year. The other thing that I would highlight is that though you mentioned 1 year, but as you rightly said, 2 year, 3 year, 4 year, 5 year, we have done, all of us have, including our fund, has done better than the benchmark index. So the last 1 year has been let's say, a lower performance related to benchmark, but long term, it all averages out.
Yeah. Banking has not done very well in till about 2019, and after the liquidity crisis in 2019, there was a good cycle as well till about 2021-22. Does it look like now banking has lost its sheen? And I know you do have banking and financial stocks in your portfolio as well. So what is your take on the banking sector going forward?
So we've been very, very choosy in banks in small cap specifically. By the way, we are very optimistic on banks. We believe that banking will continue to do very well as a general sector, but that view is largely for large cap banks. Banking, in the way it has always been in India, especially at a time when liquidity is tighter. Just yesterday, State Bank of India, for example, raised deposit rates by 25 to 50 basis points, depending on what tenor and what period and amount. Even today, for example, the FD rates are going higher. So liquidity is tight. RBI has been keeping, Reserve Bank of India has been keeping liquidity tighter in the economy. As I said in the initial remarks, government and the RBI are trying to bring down growth or trying to bring down credit. And the one way to do it is to control liquidity. And the central bank RBI has been controlling liquidity quite significantly, especially when busy season is coming in now. And because of that, and in these times, it is challenging for smaller banks to raise deposits at the right price, which means that their profitability does get impacted. And it takes longer for them to scale, basically. But ultimately, we are in a growing economy. Credit growth will happen. Corporates will borrow more over the next 3-4 years because capex is happening, real estate is doing well. So housing loans will also grow. So ultimately, all banks will grow at a decent pace. Profit pool will keep growing. Valuations are reasonable. So there is a case to be made for banking as a sector to do well. But if I take an immediate 12-month to 18-month view, I think it makes sense to buy or focus only on the larger size, large cap banks over the smaller size, small cap banks. And in this environment, I must add that NBFCs will have a bigger issue to raise capital, especially when RBI has also raised risk weights. And now RBI is also, just today in the SBI economic conclave that is going on, I heard RBI Deputy Governor saying that banks need to be very careful in lending to NBFCs. Because of the exposure that the banking sector has on it. So whenever a regulator makes such statements on any topic, we pay a lot of attention. Because if the regulator is saying this, which basically means that banks will have to slow down their lending to NBFCs. So NBFCs will have to borrow from the market or through FDs if they are allowed to raise FDs. So they will have some growth challenges. So you need to be very choosy in what you do in the market today. But generally speaking, I am optimistic on banking over a long period of time. If you have to think about the next 12-24 months, I think more importantly on the large cap, large banks.
Positive on banking, more skewed towards the large cap space, and the NBFC space looks challenging for the next couple of years. In terms of let's talk about the past of small caps. Till 2017, small caps had delivered very well returns. 2018, they saw negative returns. In fact, when I speak to investors now who came in after the rally of 2020, investors often find it very, very difficult to believe that small caps can even deliver negative returns. But that happened in 18 and 19. So why did that happen in 2018 and 19? And does it look like that we are going to enter into a similar phase now?
There are two things that I want to highlight on this question. One is that, first of all, one part of the answer is that in 17, when the small cap segment went up, it was without any earning support. There was no earning growth actually. Economy was on the weaker side at that time. In fact, we were heading towards a NBFC crisis in 2018 has actually happened. So the market economy was generally quite tight. Liquidity was tight. Nobody was trusting each other. There was suspicion, and ultimately it resulted into some NBFCs defaulting on their loans. But the fact is that in 2017, earnings was quite weak for most small cap segment of the companies, but still stocks went up by 50 to 100%. And 2018, earnings became even more weaker. And when earnings became weak, logically these stock prices could not support and hence corrected very sharply on a very high base. The second part of the answer that I want to highlight is that what used to be called small caps till 2018 are no more, they are still small caps, but we don't look at them for our portfolio. For example, I remember right up to 2018, in fact, point when we used to launch our fund, before we launched our fund, see, the SEBI came up with a recommendation which AMFI started using for standardizing definitions for large, mid, and small for the industry. This happened in late 2018 or mid 2018. Prior to that, every mutual fund, every insurance company used to have their own definition of what they used to call large cap, mid cap, small cap. There was no standard definition. And hence I'm saying this is that sometime around 2017-18, companies generally, I used to think that way, that companies below 1,000 crore is small cap and anything above that is mid cap, and then very large companies are large cap. This changed. And today, for example, we don't even look at companies below 2,000 crore. And even when we launched the fund in 2018, we didn't even look at companies below 1,000 crore. So the choice of companies, you need to be very choosy in what you buy. For example, even today, companies below 1,000 crore market cap are extremely volatile. Even in the last 4 or 5 years, they've been very volatile. So their standard deviation of returns is very high. Whereas for companies which are larger in size, and generally these companies are leaders in their respective sectors. They are generating free cash, balance sheet has low leverage or zero leverage, management quality is better, and hence volatility is lower. So I would say that this part of small caps is a better quality small cap over the earlier part of the small caps. The earnings delivery has changed significantly for sure. So what used to be no earnings 17-18, where there was hardly any growth, in fact degrowth in earnings, and still stock price went up. In the last 3 years, earnings would have grown at a very, very healthy pace. For example, Bloomberg consensus for FY24 for small cap index, NSE 250 small cap index, is expecting an earning growth of 35%. Now, we did not see those kind of earning growth in the past. Now, in the last 3 years, earning growth has been very, very strong. So whenever there is a earning support, the chances of stock prices correcting sharply is not there. Yes, valuations have moved higher over the last couple of years, especially this year. So there is a case to be made for some amount of consolidation, time correction, marginal correction here and there. But I am not of the camp which believes that you should expect a sharp correction on price point perspective. Even if there is a price correction, it will be very temporary and it will bounce back again because of the positive fundamentals that we see on the economy and business perspective.
All right. So 2017-18, we were seeing stock prices rising without any corporate earnings support. And when the corporate earnings were no longer supported, the stock prices had to come down. But now we are looking at one, good quality stock, small caps. And secondly, we're also looking at corporate earnings being supportive. In 2020-21, when the rally in small caps had just started, I remember our last interaction, and I remember your lines. You mentioned, "Picture abhi आधी भी नहीं हुई है, अभी तो ट्रेलर तक भी नहीं पहुंचे हैं." अभी क्या लगता है? What does it look like? Have we reached towards the end of the blockbuster now?
So maybe we've reached an interval. One needs to take a pause, have a break, have some snacks, take a cool drink, chill out, and then come back again in the theater. So I would say that maybe 1 year of consolidation is important. And we need to see, for example, when we think about manufacturing, and small cap is all about manufacturing, as I was saying. And what we've seen till now in the last 1-2 years is the make in India for India, which is more visible from an earning growth perspective. What people are now starting to price in the stock price is make in India for the world. Now, for that, many companies are today, as we speak, either in land acquisition mode or in capacity expansion mode, greenfield capacities, which will come in by, let's say, next year and sometime in FY25 or FY26. Even the PLI benefit schemes, a large part of them will come in FY25, some in FY26 as well. We need to see the execution on that. As and when, though I'm very optimistic, I think it will happen. Over a period of time, it will happen. But there can be some delays somewhere here and there. I think once the real execution on manufacturing picks up for the world, and we see early signs being very positive, but if it happens, then certainly, yes, I think there is that half movie still remaining to come, but maybe after interval. And that interval could be 1 year, maybe 1.5 years or 2 years.
And within this 1 to 2 year period, we are expecting a consolidation in the returns, but because of the fact that corporate earnings are still very healthy, it doesn't look like that there's going to be a negative return picture starting from now.
I would say so, yes. I'm optimistic. I think, so for example, I'll give you one sector, especially auto ancillaries. The more I meet companies in auto ancillary space, the more I believe that we are already there where Europe plus one is happening in a very big way, and it will happen in the next 2-3 years. China plus one is still away for that sector, but Europe plus one is certainly happening in a very big way. So different sectors are at different stages. So I think over a period of time, it will happen for sure. But for some time, it is better to see consolidation and then see the next up move.
Sure. In your previous interactions with distributors, you've also maintained that price to earnings or valuations of indices, especially the small cap index, is not a correct way to look at the valuations. So why is that, and what would be a correct way to picture the valuations of small caps in?
So, and in fact, I would say that even a fund average valuation doesn't make sense. See, in small caps, there are so many sectors, and within sectors, so many different kinds of business models. And not all businesses deserve similar valuations. Mm-hmm. And that happens in large cap, mid cap as well. But small caps, the differences are very stark. There are some businesses which will never deliver more than 15% ROE. And there are some businesses which even deliver 30% plus ROCE. So extreme differences are there in return generation, profitability generation, capital profile, balance sheet profile, growth profile. And hence there are wide variations in valuations. Some companies trade at 5p will probably never go beyond 10p. And there are some companies which even trade at 50p and probably go to 60p. And in this environment. So I think, and hence averages kind of hide the real story. So you need to actually, so the right way to look at is to see the internals of each portfolio, including the benchmark index, and judge for oneself whether valuations look appealing to us, what kind of return performance one can make. But I don't think it is an easy exercise for a normal person to do. One needs to rely on a professional to seek views on, and which is why you would observe that most fund managers managing small cap funds today are saying that for some time maybe valuations have moved higher, even though on an aggregate basis valuations would look lower. but aggregates don't give you the right sense. Generally, we are all saying that for some time it makes sense to consolidate, maybe expect low returns for some, maybe the next 12 months. And as and when earnings delivery happens, if you start looking 1 year, 2 year forward, you may see better returns again. So it's more about the business environment, the scalability, the individual companies' balance sheet profile, ROE, ROC profile, and management quality.
So very, very subjective call requires a little more detailed analysis than just the price to earnings to be able to go into balance sheets and see the ROC to be able to identify the valuation of not just the company but the index itself. All right, CP, my last question to you would be from the next 5 years perspective, where are you seeing small caps? And if you had about a crore to invest, which you don't require for the next 5 years, will you invest that money into your small cap fund?
So I think on a 5 year basis, yes, today I'm quite optimistic. If manufacturing, as I've been saying, if manufacturing were to happen the way it looks like, then there is a very high probability that small cap as a segment can deliver a fairly decent returns to investors. Having said this, if I have 1 crore to invest, I will never put everything in small caps. Like I have been doing from when I was extremely optimistic, it's in 2018-19 when we actually launched the fund. Even then, I would have never invested my 100% of my personal wealth in one segment of the market. It is always advisable to do asset allocation based on individual risk return profile. But yeah, I think today small caps do look attractive, provided your return expectations are on the lower side or on the rational side. It's just that in the last 3 years, small cap index, or last 5 years, you said our fund has delivered 25% plus CAGR. So return expectations have moved higher even for the immediate 12, 24 months, which at least I believe that having those kind of return expectations, you may be disappointed. It is better to have reasonable expectations rather than such high expectations.
You've given a very, very genuine answer rather than just a pro fund manager answer to investors to asset allocate across market caps for achieving their financial goals. All right, CP, that was my last question to you. It was excellent interacting with you. Small caps is a topic which is very, very close to my heart. And I always maintain that for achieving your financial goals in the long term, small caps should be a good and significant percentage of the portfolio depending upon the risk appetite. Thank you very much, CP, for joining us today. Thank you very much, investors, for viewing this story. Please do continue to let us know on what other topics you would want us to talk about. Please do subscribe to this channel if you do like this video. I do believe that this has been able to add value to your financial content as well as to clear a lot of your doubts on small caps. Thank you, CP. I'll be signing off from here. This is Shalini Gera. Take care. Bye-bye.